We're entering one of the most critical weeks for crypto markets in months. The Federal Reserve is about to make its rate decision Wednesday, big tech earnings drop the same day, and GDP numbers hit Thursday morning. But here's what most people are missing. While everyone watches Bitcoin, Ethereum is quietly setting up for something massive. A whale with a perfect trading record just added over $167 million worth of ETH to his position. The Ethereum ecosystem is now hosting $370 billion in user assets. And some analysts are calling for a supercycle that could push ETH to $21,000. In this video, I'm breaking down exactly what's happening on-chain, what the charts are telling us, and where I see the next major moves. Let's get into it. We need to talk about the macro environment because it's going to move everything. This week is absolutely stacked with market-moving events. Monday kicked off earnings season with Visa, UPS, and PayPal reporting. Tuesday, the FOMC meeting starts, which sets up Wednesday's main event, the Federal Reserve's rate cut decision. That same day, Microsoft, Google, and Meta report earnings after the close. Thursday brings the Trump-Xi meeting at APEC, where trade talks are heating up, plus Q3 GDP numbers at 8:30 a.m., followed by Apple and Amazon earnings. Friday wraps with core PCE inflation data and final earnings reports. Why does this matter for Ethereum? Because risk assets like crypto respond directly to Fed policy and liquidity conditions. If we get dovish signals from Powell, that typically supports crypto prices. Big tech earnings also matter because institutional money flows between traditional tech and crypto, depending on where they see better opportunities. This week could set the tone for the entire November-December period. Let me show you something interesting. There's an Ethereum whale who has a 100% win rate on his trades. Not 99%, not 95%, literally perfect. This trader just added more to his ETH longs and now holds over 40,000 Ethereum worth over $167 million. When you see someone with that track record increasing their position at these levels, it's worth paying attention. This isn't retail FOMO. This is calculated accumulation from someone who clearly understands market structure. The fundamentals behind Ethereum are getting stronger, not weaker. Applications built on Ethereum now host approximately $370 billion in user assets. That's not some abstract metric. That's real capital deployed in DeFi protocols, stablecoins, lending platforms, and tokenized real-world assets. The top categories by total value locked are stablecoins, lending, liquid staking, decentralized exchanges, and tokenized real-world assets. Here's a key insight. ETH currently trades at about 1.27 times the multiple of its ecosystem's total value locked. Historically, when the ecosystem TVL grows, Ethereum market cap benefits. Think of it like this. The more valuable the applications become, the more valuable the base layer becomes. More usage means more fees. More fees mean more value accrual to ETH holders. And it's not just about existing applications. Ethereum and Base are topping the builder energy charts. 42% of founders surveyed said they want to build on these two chains alone. That developer mindset is crucial for long-term growth. Where developers build is where users eventually go. We're also seeing real institutional adoption. A Japanese startup just launched the world's first yen-pegged stablecoin, and they chose to deploy initially on Ethereum, Avalanche, and Polygon. When traditional financial players enter crypto, they're choosing Ethereum for infrastructure. That matters. The tokenization trend is accelerating too. Every asset that gets tokenized, every stablecoin that launches, every institution that brings capital on-chain, it all benefits Ethereum's market cap. The market cap of tokenized assets on Ethereum has been setting the floor for ETH overall valuation. As more real-world assets get tokenized, that floor keeps rising. Activity metrics support this narrative. Uniswap generated $96 million in fees during October, outpacing Hyperliquid's $88 million. That shows organic usage and real economic activity happening on Ethereum's layer. Now let's dive into the technical setup, because this is where things get really interesting. I'm looking at the ETH USD weekly chart, and the structure here is telling us a lot. Ethereum is currently trading around $4,200, and we need to understand where we are in the bigger picture. First, the moving averages. Price is sitting above the 100, 55, and 21-week exponential moving averages. Those are the yellow, purple, and blue lines you see. We're also crossing the 10-week EMA, that softer blue line at the top. As long as we close this week's candle above it, which looks likely, the trend structure remains bullish. When price holds above these key moving averages on the weekly time frame, it signals that buyers are in control. I anchored a Fibonacci retracement from the August all-time high at 4,960, down to the early October low at 3,520. This gives us our key extension levels to watch. The 1618 Fibonacci extension sits at 5,850. That's my first major target zone where I'll be taking some profits. The 2618 level comes in at 7,280, and the 3618 level is way up at 8,720. These aren't random numbers. They're mathematically derived levels where price often finds resistance or support based on the previous swing structure. Looking at the horizontal support and resistance areas marked by those dashed orange lines, we're working inside two distinct channels. The lower channel runs roughly from 1,650 up to about 4,200 where we are now. The upper channel extends from our current level up toward that all-time high area. This channeling pattern shows that price is respecting these zones, and we're in a consolidation phase before the next major move. The Fibonacci RSI indicator at the bottom is bouncing from the neutral zone, which typically precedes upward momentum. When the RSI on this time frame bounces from neutral and starts climbing, it often confirms the beginning of a larger impulse wave. For anyone watching who's been out of ETH or sitting on the sidelines, I still consider the 3,600 to 4,300 range a primary accumulation zone. That's the green box on the chart. We're currently at the higher end of that zone, so the risk-reward isn't as favorable as it was a few weeks ago when we were closer to 3,600. But here's my honest opinion. Having zero exposure to Ethereum seems riskier than buying at these levels. The setup is bullish, the fundamentals are improving, and momentum is building. The volume profile on the left shows the point of control, sitting way down at 1,600. That's like a magnet that could theoretically pull price down in a severe bear scenario, but I don't see that happening in the current macro environment. The first weaker point of control below our current price is around 2,600. If we do see a future correction, that could be where we find support, but that's not my base case for the next few months. My 3 take-profit zones are marked with green circles on the chart. These align with the Fibonacci extensions and represent areas where I'll be scaling out of positions and taking profits. I'm not trying to catch the absolute top. I'm trying to capture the majority of the move and protect capital. Now, an interesting thesis from Tom Lee, CEO of Fundstrat Capital, is gaining traction. Ethereum might be entering a supercycle similar to what happened with Wall Street in 1971. He says if Ethereum were to recover its ETH-BTC ratio to the 2021 highs, we'd be looking at Ethereum around $21,000. Now, I'm not saying that's guaranteed or even likely in the short term, but the fundamental case for it isn't crazy. Major institutions like Larry Fink at BlackRock and companies like Robinhood want to tokenize everything on the blockchain, and about 70% of that activity is happening on Ethereum. If tokenization becomes the dominant financial infrastructure, Ethereum is positioned to capture enormous value. Look, I'm bullish on Ethereum's setup here. The technicals are aligning, the fundamentals are strengthening, and the macro environment could turn favorable this week depending on the Fed's decision. My targets are based on the Fibonacci levels and chart structure. I'm prepared to take partial profits as we approach those targets. If you found this analysis helpful, hit that like button and subscribe to the channel. I've got 2 previous Ethereum videos that dive even deeper into specific strategies. You'll find those links on the screen right now. And if you want to join my free Telegram group, where I send real-time insights and my setups, check out the link in the pinned comment below. This is going to be a wild week for markets, so let's navigate it together. Never financial advice. I'll see you in the next one.